So, James, I really enjoyed our conversation with Jonas today, didn't you?
I really did. It's funny. Jonas has kind of brought me around on ATMs. I'm actually enjoying talking about it now. That was like I'm like game to talk about anything in the industry. ATM's always kind of been my,
Right?
I couldn't get into it, but with Jonas, he's so passionate about it, and there really are some incredibly interesting things going on with it.
Yeah, yeah, I agree. And some opportunities. I mean,
Yeah.
you and I have discussed this in the past. I've always been sort of pro ATM. You're
Yes.
sort of like, yeah, okay, Patty, sure. But
Right. Right.
I think you'll come, our audience will come through, come on the other side of this interview, understanding that, yeah, there really are some
Yeah.
opportunities
Well,
there.
and they'll understand cashless ATM, which frankly
Big,
I didn't fully understand until this interview. So that, the
right.
cannabis dispensaries and just the idea of the cashless ATM, that's going to be really interesting as well, I think.
Which we didn't really get into, but it's not just cannabis dispensaries; they can be
Right.
used other places.
Of course.
And so it might be an opportunity. And then I really enjoyed your question from the field.
Yeah, so I talk about external risks to merchant sales. Normally, I'm talking about external competitors, meaning
Right,
Square, Toast, Stripe. But that's not the topic today. Today, I talk about external types of value exchange. So P2P. I
hmm,
talk about FedNow. I talk about delivery services like Uber Eats, DoorDash, Grubhub, and how those are going to impact over the next 2 or 3 years the merchant sales, where we're going to actually lose a percentage of the volume that we would process.
right.
And then tell us about the insiders report today, Patty.
Well, we kind of continue with the ATM trend, although it's more about debit cards and about we just do a brief overview of the Fed's recent change to credit debit card routing rules.
Yeah.
And our episode today is brought to you by NMI. Go to nmi.com to learn more. James, are you ready to start with the podcast?
Let's do it.
Hey, everybody! James and I are here today with Jonas, our good friend from Star Financial. Jonas, I know we've had you on the podcast in the past, but maybe for those who might have missed that episode, or people who aren't familiar with you, perhaps you can give us a brief overview of your path in merchant services and tell us a little bit about Star Financial.
Sure, Patty, thank you so much, and James for having me as well. It's great to be back. And actually, the path to in on our ATMs and merchant services for us is for me actually it's actually by accident. I was actually working in a government position, going studying to go to law school, and just looking for basically a side hustle. And
Wow.
uh, and ATM is actually where I started, honestly. And it
That's
was
unique, I'm sure, for law students.
yeah, looking for a side hustle, and honestly, first I couldn't believe it because I used to work at a bank, when I was
Okay.
in college,
Uh-huh.
and we used to fill the ATMs all the time in the drive-through ATMs, and I just didn't understand, like, how could I do that, like, at another location? Like, it didn't even dawn on me
That wasn't a bank, you
until
mean, right?
it wasn't a bank. It wasn't a bank. So I was like, wow, this is interesting. So I placed an ATM. My first ATM was actually in a tanning salon from all places. that
Wow.
That's unusual.
yeah, at the time, that was really having a hard time with their merchant services. This is
Oh,
15 years
okay.
ago.
Uh-huh.
They're super expensive for them, I guess, and they
Right.
wanted to go straight cash only. And put my first ATM in. It was dispensing tens only,
Right,
uh,
right.
and really that's where I started. And from there, one by one, just building it block by block, and I got to a point, 2 3 years in where I could not maintain my job and do payments at the same time. So I had to basically make a decision at that point. So I left my government gig, and that was it. Star Financial was born, 2007, I guess it is
Oh, wow.
2007. Yeah, yeah,
About 15
and
years you got in. That's
You
awesome.
got a lot of years under your
yeah,
belt there, my friends.
yeah, yeah, definitely. So that's how we got started, and and merchant services was actually honestly also a natural add-on for us because we're in the ATM space, and
Hmm.
I don't know, we'll cover this later, but merchant services is a real great. It's a complement for an ATM. And merchant services and ATM do maybe some people may not agree with this, but do not compete necessarily.
Right,
Mm.
right.
They're complementary of each other.
Yeah.
Some of our great locations do both. So
Hmm. And that's actually something I wanted to delve into, because I agree with you. I've always felt that ATMs are a great complement to merchant services. Um, but I've
Yeah.
not always felt that my opinion is the dominant opinion, shall we say. So I was wondering if maybe you could explain to our audience why ATMs are something that ISOs and agents should care about, and maybe you can delve into the revenue opportunities.
Yeah, absolutely. So for the ISO and agent, it's really an additional, outside of the revenue piece, which we'll touch on, but it's really a retention piece and becoming that trusted partner
Right.
for that location that they're serving today, right? They're already serving the client today in merchant services, having, and you're not necessarily visiting the terminal or the account every day, but when you're touching base with the client, it's having that trusted relationship with them and adding an additional layer of stickiness to that merchant, so that they're, your go-to basically as a payment professional. So
Mhm.
you encompass, merchant services, ATM, and other services that you may have, that also, it's all inclusive, and it's just a higher retention rate for your client. And the revenue piece really actually depends on how the ISO or the agent, how much of it do they want to be involved in, at least on the ATM piece,
Right.
because there's many
Sure.
programs. For us, we specialize in the turnkey program for our ISO agents, where
Okay.
we handle, we do the heavy lifting, I guess, if you will,
Uh-huh.
from the deployment of the machine to servicing of the ATM, cash management, the whole nine. So um, it's super passive for a lot of agents,
Okay.
but there's some agents that want to be involved in that piece. So um, definitely different revenue structures there, really.
So are
Yeah.
they receiving a transaction revenue, or does it all and a deployment? I mean, are there ongoing opportunities, or is it a one-time kind of deal?
No, so both
Okay.
really, both. So if there's, because there's some agents and ISOs that are like, hey, here's the account, can you guys handle this? And I want nothing to do with it.
Hmm.
And then there's some that are like, hey, I don't want anything up front. I want a per transaction revenue,
Okay.
and and that's how some ISOs agents want it. And honestly, I think that's probably the best way,
Hmm.
is building that residual and long term kind of
Mm.
passive income for them. So, but we entertain both opportunities.
Okay.
Cool. So, Jonas, I was curious, when we talk about selling ATMs, and kind of getting practical for our audience, one of the things that's always interesting to me is kind of this vertical specific things. And, it's a good thing, I feel like, because I think one of the challenges our industry's had with ATM in the past is that, there are certain businesses that are great for ATM. There are certain that are maybe not. And in the
Hmm.
past, our industry has just kind of been very much scattershot. The agents kind of like, they go sell everybody. And so the idea that only a few of their merchants would be a good fit for something was a little bit of a problem. Now, as the industry shifts more towards verticalization, I think that's going to bode well for that combination, because a lot of agents are like, oh yeah, those are the kind of businesses I sell. So can you talk a little bit about what makes a good business type, or what makes a good prospective business for an ATM machine?
Yeah. So that's a great question, James, because you're absolutely right. There's some locations that are just not going to qualify for an ATM just because there's just no need for it. But I think because of the way the industry has shifted, especially now with different merchant service programs, especially with cash discounting, that has kind of taken a different model and different approach for certain locations, where they want to incentivize cash, but maybe that location or that business did not have an ATM before, right?
Hmm.
Right.
So now they're encouraged to, they're like, okay, well, if I'm pushing dual pricing, where I state a cash price and a card price, and my clients don't have access to cash on site, you know that makes that location now viable or qualifies, for an ATM. And we've come up with very interesting programs actually across the board for some ISOs and agents, where merchants, for example, don't even want to charge
Right.
surcharge to the client, that's using the
Uh,
ATM. they're encouraging, like, hey, here's a surcharge-free ATM on my site.
Yeah.
And if you want to pay the 3.99% card fee, great. Build up your miles, whatever you want to do there. But if you don't, here's a $2. I'm sorry, here's a free ATM on site.
Right.
And that merchant eats that cost, for the ATM. And this is it's like a hybrid program. Honestly, it's not your standard ATM program.
Right.
Not a lot of locations are coming into this knowingly per se, but when you offer them, when the ISOR agent offers them as a coupled program, it's definitely an interesting piece for them to implement. So
I will say, as a user, I know of several merchants like that, and I always reward them by spending more money there. I mean, and I think that's the logic, right? Is that
100%.
Yeah.
And what about, I mean, just for our listeners maybe that might not understand, as far as a business though that would be very profitable on the residual side to have an ATM machine, I know foot traffic would be kind of the big thing. Can you give us some examples of some really specific business types that are just kind of your bread and butter, where you're going to get a lot of foot traffic that tend to do better than others?
Sure. So your standard grocery, convenience store, gas stations, liquor stores, these are the bread and butter of volume. And there's a lot of foot traffic in most of these businesses, not necessarily all, but most of them. That's and this is where where most of the transactions are occurring today.
Right. Not in your department stores or your furniture stores,
Yes.
Right.
Yes.
It's in the kind of stores where people might be apt to use cash, or they might frequent with such frequency that it's a logical place to go for cash.
Exactly.
Right.
Yes.
Right. So, Jonas, you mentioned about dual pricing and so forth. I'm just wondering, I'm curious if you've seen any impact on ATM usage at merchants that are on cash discounting and or surcharging.
So the impact that we've seen, and not necessarily in transaction volume with existing locations, we haven't. We've seen a slight percentage increase on usage on existing locations, but where we've really seen growth, if you will, is in the hybrid locations when a dual pricing or when a cash discount program started becoming popular. Honestly, like right after COVID, as restaurants, especially restaurants, actually, honestly, it's, restaurants. Restaurants, to go back to James's question earlier, locations that have higher foot traffic, restaurants have good traffic, and it's a hit or miss with some locations for transaction volume. But with cash discount, with being implemented at some of these restaurants and doing some of these hybrid programs has increased new opportunity, new locations that where we would have usually walked away from. And now with this type of hybrid program is, brought a new opportunity at these locations where we can work with the merchants to implement that surcharge free style program.
That's really interesting. So what you're saying is, it's not necessarily that implementing, because we've known for a long time that dual pricing cash discounting doesn't really change consumer behavior per se in a major way, as far as now they're going to use cash. But what you're saying is it's a more of a rationale where now a lot of business types who maybe weren't interested in the ATM before, or it wouldn't have been a good fit, now all of a sudden it's like a justification for them to say, well, I do want to implement this dual pricing, but if I'm going to do that, I should probably put in an ATM machine as well. And that's the pitch that the agent's able to use. Is that what you're saying?
Exactly. Yes.
Yeah.
Interesting.
100%. 100%.
Yeah. And actually it's interesting because I recently had a conversation with a liquor store that did just that. They said it's not like a bunch of people are going to the ATM and getting cash just to pay with cash, but they had the place that they could put it that wasn't going to interfere with their floor space. So why not just put it in there?
Interesting.
So and again, it's interesting because, like you say, a liquor store is a kind of place that would seem like a slam dunk for this, right?
Yeah.
Okay, so if you don't mind, I'd love to get down to the nitty gritty now. in terms of how does an ISO or an agent know that they're a good fit for working with an ATM company? And, are there, you talked about the different kinds of relationships and sort of how involved everybody gets, but I'm wondering, I'm an agent. I've decided I want to start to, offering my customers ATMs. How do I go about evaluating a company? An ATM ISO, is that what you would call yourself, an ATM ISO?
That's correct. Yep.
Okay.
Yep. That's correct. And basically what you want to do is you want to understand, first you want to, you as the you as the agent or ISO that wants to offer ATMs to your merchants, need to understand, hey, what do I want to do for my merchants? Do I want to offer them a turnkey or kind of a mixed bag where they where they own and operate, and where the ATM ISO owns and operates, provides a turnkey program. So kind of understanding that piece first, is key for the ISO or the agent when they come on board, or when they're about to evaluate a company, because there's a lot of ATM ISOs out there that provide a mixed bag of programs, and fit everything as one, right? But what you want to be careful with, when evaluating an ATM ISO is the service. At the end of the day, ATMs, ATMs are a little bit different than merchant services, where we don't install it and walk away kind of deal. You constantly are coming back to that terminal to touch it. There's preventive maintenance that you got to provide, that you have to do on a regular basis. There's cash management piece, software updates, the whole nine that needs to happen, whether the merchant owns it or whether the ISO owns it, right? So that's one thing that you want to evaluate is what's the service relationship with that company. Like for us, that's where I started with turnkey programs, and the majority of our portfolio, I should say, is turnkey programs, where we handle the entire operations of the ATM. So we have a type program where we provide preventive maintenance, cash management, and monitoring of the terminals, so that we don't have downtime. Key thing is to have no downtime at the ATM, because if the ATM is down, it could be 1 hour or a day. It's like what James said earlier. Customers are creatures of habit. So it's like when they see it down one time, they're like, "Oh, I got to go to the next one,"
Right.
and then you're gone.
Yeah.
They don't come back. So it's mitigation. How does the company mitigate problems? To make sure that the ATM uptime is near 100%.
So you made a reference there that I'm not sure I'd love to have you just clarify a little bit. And I believe I understand this correctly, but make sure I'm right. Is that an ATM can be owned by the retailer, or it can be owned by the ISO, or it can be owned by the agent? Is that what you're saying?
Correct. Yes, absolutely. There's those,
and the
those
revenue
are
model
options.
differs accordingly.
The revenue model differs, equally, for sure. The most popular program is the turnkey program. There's some merchants that want to own the terminal, but tighter regulations have kind of put a damper on that. Let's just say for merchants that want to own and operate their own machines. So
and when
but
you
it's
say
still
and when you say turnkey, Jonas, let me rephrase that to make sure I understand it.
Right.
So I think what you're saying, turnkey, is Star Financial owns the ATM machine. Star Financial installs the ATM machine. Star Financial services the ATM machine. This generates revenue. The agent who sold it is going to get some piece of the revenue depending on the structure.
Correct. Yep. You got it.
And again, I think too, to clarify, my understanding is that, that is the issue as far as being able to kind of qualify for a program like that. You need to make sure you have a location that's going to do enough traffic to generate enough, surcharge revenue from the ATM to justify it. Because this is not like you're buying a little credit card machine for $200. Like, ATM machine is like a pretty serious piece of hardware that's expensive. So you have to have enough revenue to offset this kind of initial investment. Is that right?
Correct. Yes, you're 100% correct. Yes.
Cool.
Okay,
Yep.
So
cool.
one of the other questions I had, when we think about, the ISO agent here, and I know we're going to get to some cashless ATM stuff here in a minute. Before we do that, I'm just curious, one of the misconceptions I think with agents that I've talked to about ATM is they tend to look at it as more of a all or nothing thing. It's like, well, I'm going to offer ATM to everyone I speak to, and otherwise I can't sell ATM. And it's like, well, no, like you need a relationship with somebody like Star Financial, not so that you can dedicate 40 hours a week to selling ATM machines, but because inevitably throughout the week or the month of doing your prospecting, you're going to run into a couple of businesses that would be a great fit for an ATM. And in those cases, they want to reach out. So talk a little bit about kind of that. I'm just curious how that works. Is that what you see with a lot of your partners, that they send you a deal here and there? What are your thoughts on that kind of the sales process and referring business to you?
Yeah, 100%. And we, in our training program and our onboarding program with agents and ISOs, we bring up that exact same point that you just brought up. Honestly, it's because they'll throw a couple locations at us, and some of those locations don't qualify because of less traffic, or the traffic is not there, and we, that location does not qualify, and some agents get discouraged. And and we're like, listen, so we're upfront about that.
Right.
We're upfront about that. We're like, hey, listen, some locations just don't qualify because they don't have enough foot traffic, or the size of the business is just not there to justify this expense. So, these are some of the parameters that you should follow. These are some of the common businesses that work. But there's always what we call our hybrid programs that can come to that you can bring to us, and that we can curtail a program that can work for the merchant, for you guys, and for us. So we don't, we tell them, hey, listen, don't be discouraged completely, but before you even approach a location, while you're doing prospecting, when you're not, if you have a list of locations, hey, Star Financial, this is these are the locations that I think qualify. What do you think before before I approach them? And we do the due diligence on that location and say, hey, these are great. I think these would qualify for us. These ones are not a good fit because there's no justified traffic, or it's in an area that doesn't have usage. And we help qualify the locations for the agents and ISOs, and address it that way. And we try to be as forward and upfront as much as possible, just so that they are, agents and ISOs are not, wasting their time at locations that are not qualified.
Sure. So I'm thinking about locations that are not qualified, are locations presumably that don't get a lot of foot traffic, or are they locations where the ticket is so low that it just doesn't seem feasible?
No, it's actually honestly, it's about traffic. It's
Okay.
it's the foot traffic. Foot traffic at the location is the main determine
Mhm.
denominator, I guess you could say, in
Mhm.
in our factory, is really about foot traffic. And because we can adjust withdrawal limits,
Right. Sure.
or even denomination type at a
Mhm.
location. So
Okay.
um, yeah.
Okay. Jonas, I wanted to kind of, go to a more recent topic as opposed to a general topic. And there's been a lot of talk lately about cashless ATMs.
Yeah.
Before I get into what I wanted to ask you about that, perhaps you could explain to our listeners what exactly a cashless ATM is and some typical applications.
Sure. So a cashless ATM is basically a point of sale device,
Hmm.
a countertop point of sale device that mimics an ATM.
Okay.
And mimics an ATM software, an ATM transaction, and an ATM flow, a transaction flow, so that the processor or um, uh, yeah, the processor on the back end thinks and works like an ATM machine. So, and it's been it's popular in dispensaries today.
Cannabis
And
dispensaries, right? Hmm.
cannabis dispensaries um, where it's uh, where it's affected the ATM business, and it's you know um, not legal, and and the card brands are really kind of cracking down on that right now,
Mhm.
and really going after locations or providers that are providing this today. So we don't provide that today, obviously, we're because and we can go into ATM and the deployment of an ATM at a cannabis location, because it's different than putting an ATM, say, at a retail location. Like if we wanted to put an ATM in a retail store, it's very simple. You just deploy an ATM and that's it. As an ATM ISO, right? But as an ATM ISO today, if I want to put an ATM at a cannabis dispensary, I have to make sure that my processor and my sponsor bank are aware of the placement, and that I'm following, strict guidelines on BSA and AML, and the ATM ownership, is listed, on the ATM, just so that there is no, I guess, commingling of funds according to what their guidelines are. So it's a very strict program to place ATMs in cannabis dispensaries today.
Okay.
But yeah, so cashless ATMs are the workaround for dispensary owners.
And just to back up for anybody who might not know, BSA stands for Bank Secrecy Act. AML stands for Anti-Money Laundering. The idea being that ATMs can be used by drug dealers or other nefarious people to launder their proceeds. Okay.
And as the one of the three of us that knows the least about this, let me clarify a couple of things. So, I actually wasn't aware of some of this. So, are you saying, Jonas, that even putting an ATM machine, a real normal cash dispensing ATM machine at a cannabis dispensary, is that something that's getting approved? Are you able to make those placements, or is that something that's still really, really taboo and it's very difficult to get those deals approved by your sponsor bank?
No, it is. It's we can do it today without issue. And and if they're, agents on ISOs that are, in that space, if you will, or targeting that space, 100% we can place them. We can place it for them. What I would bring forward is that, when agents and ISOs are going out to place ATMs, either through us or through anybody else, that they want to be careful that it is a compliant ATM, because it's not a simple ATM that you're just going to put in, because that puts you as the as the agent ISO at risk, the ATM provider and the dispensary owner as well, for not having a compliant ATM. And really, sponsor banks and processors have clamped down on this, including the networks, because of this whole cashless ATM situation, where it's gotten really out of control now. So it's really become difficult whenever you're putting an ATM, it's really got to be with a compliant provider versus,
just anybody.
Placement.
And one more follow-up before Patti gets back, because again, I just want to make sure. So the cashless ATM, again, I'm going to dumb this down for myself to make sure I got it. So we have an ATM machine. I'm in a cannabis dispensary. I want to make a purchase. I walk over to the ATM machine. I put my ATM card in, put my PIN number in. I get cash. I walk back over to the counter. I buy this product. So that is legal. And, as long as you get the account approved and you're forthright about what type of merchant it is and all that, it's a compliant ATM machine. You're good. The cashless ATM, basically, if I understand it correctly, is the cannabis dispensary owner saying, rather than having that inconvenience of walking over and getting the cash and paying the fee and coming back over and paying, you can just use your card right here at the counter at our point of sale system. But it's not really a point of sale system. The transactions are kind of disguised as if it was an ATM transaction, but they're putting it through for the amount of the purchase. And so it really isn't a compliant ATM transaction. Now it's credit card processing, which isn't compliant at a dispensary.
With one little caveat there, I think I have to explain, and Jonas, correct me if I'm wrong. You can't actually do the amount of the purchase. You have to round it up to the closest dollar. And therefore,
and that's how it's disguised to look like an ATM
so it's disguised to look like an ATM, and it will appear on the customer's monthly statement as an ATM withdrawal. So, Jonas, I know Visa has had issues with cashless ATMs, as we discussed, because they're a way to circumvent restrictions on merchant accounts with cannabis dispensaries. and that these transactions, the true nature of these transactions is being disguised. What I'm curious about, and I've asked this of other people in the industry, but just not on a podcast, so and I've gotten different answers. So, because as Visa has explained, the cashless ATM is verboten. It's a way of disguising a transaction that is not allowed on the Visa and Mastercard networks. Does that apply then to cashless ATMs that process through the regional ATM networks, or does it just apply to the credit card company ATM? Plus, what is it? Plus and
Pulse.
Maestro, Pulse and Maestro, right?
Pulse, yeah.
Right.
Yeah. So you're saying, does it also apply to Shazam and other regional
Shazam and
providers?
Plus and Nice and all those? Is there a similar restriction there?
So to my knowledge, the answer to that is yes. It's a
Okay.
very and I understand why you would get multiple, like different answers
Sure.
from different,
I do
different
too, right.
providers. But it's really a very gray area, if you will,
Mhm.
and it's for us, the networks are the networks, regional or national.
Right.
It's
Well, and
still
I
a
think,
network. It's
well,
a
and I
debit
think,
network.
and I think
Yeah.
too, I mean, there's a little bit of confusion as far as the networks, but I mean, this is ultimately about the sponsor bank, not just about the network,
exactly.
That's
right?
true,
And
right.
Exactly.
all of the sponsor banks agree that you can't process, transactions for a cannabis dispensary. So that's nationwide across the board. So while you have the networks may have varying rules, in some ways, I would think that's a bit irrelevant, because whatever rule the network has, the sponsor bank who's clearing the transaction says no.
Exactly.
Correct.
Exactly.
Correct. Yeah. Agreed. So I am curious though, Jonas, have these cashless ATMs have they had any impact on ATM usage at dispensaries? I know you say you've had some, ATMs at dispensaries. Are you seeing cashless ATMs go into those dispensaries and therefore diminish your traffic?
So 100%, yes.
Okay.
As soon as you see a cashless ATM come in, you see, some locations see a significant dip,
Mm-hmm.
but and some locations just see 30, 40, 50% wiped off,
Right.
just
Right.
right off the bat. So for your compliant ATM provider, it's a pretty big hit
Mm-hmm.
in some of these locations, and and that's why we encourage Visa or the regulators, whoever it is, to
Mm-hmm.
come in, and if these transactions are deemed illegal, then we need to stop them.
Right.
Yeah.
Yeah,
And it's
because
interesting
ultimately,
because as a consumer, you're going to pay a surcharge at the ATM, but you're going to pay pretty much a surcharge at the point of sale also, right? I mean,
100%.
that's the
Yep.
big deal with cashless ATMs. No merchant fees, your customers will pay the fee. But
No, yeah,
so
on the cashless ATM, they're still paying it. They're
yeah,
still paying the fee, and sometimes a little bit higher than what the ATM is.
that's what I'm thinking, right? I mean, I
Yeah.
haven't seen one. I'll be honest, I have not actually used one, but for example, I have used ATMs at dispensaries, and the fees are pretty high. I mean,
Is
Yeah.
there some other rationale or motivation for I mean, I would think these dispensaries know enough about this to know that cashless ATMs are at the very least questionable. I mean, all they're trying to do is just save their client from having to walk over the ATM machine. I guess maybe there's a negative perception there that,
they're really trying to save on the cash, James, because having all that cash
Yeah.
in their cash drawer makes
I
them prime
see.
targets.
It's a security risk,
Yeah.
basically.
Right.
Yeah.
Right.
I
Yeah,
see.
it's really it's really a security. It's the issue is a security, and two, and I think that technology was not there to support the cash issue before. Before you were just
Right.
basically stocking everything up
Right.
Yeah.
in a vault, right, and then get an armored car to come pick it up. But now there's now there's cash recyclers. There's safes that that can deposit the cash, and where the money can be credited to a dispensary. Of course, again, you have to implement a bank that actually approves cannabis dispensaries to be able
Right.
to have that kind of
Right.
conduit program.
Like a smart
Uh,
safe, right? Is that what you're talking
Smart
about?
safe.
Right.
Exactly.
Right.
Smart safe. Yes. So
Huh.
these programs are out there now, and it hasn't caught on as fast as the cashless ATMs have. But this program basically allows, or I shouldn't say eliminates, but significantly reduces that risk for a dispensary owner to be able to, when they have too much cash in their store, they put it in a smart safe. It reports, daily the machine settles, like a batch, basically like a merchant account, and it batches to their bank, and then a third party, an armored carrier approved by the bank comes in, takes those funds at whatever their capacity is, right? Weekly, daily, whatever that is.
Yeah.
So,
wow. This is very, very interesting, Jonas. I'm sure we keep talking about this for a while. I mean, I still have so many more questions, so we'll have to do another podcast episode soon. But before you jump off, though, I definitely want to give you a chance to, tell our listeners where they should go to learn more. If they are, maybe they're selling cannabis dispensaries and they're like, hey, cool, I could sell, compliant solutions here, or they're just looking for ATM in general. Where would they go to learn more about Star Financial and inquire about working with you?
Yeah, absolutely. Thank you, James. So the best place to go is www.gowithstar.com. Again, that's www.gowithstar.com. And you can reach me at ymarcos@gowithstar.com, ymarcos@gowithstar.com. And I'd love to hear from you guys and work with you.
Excellent.
Awesome. Jonas, thanks so much for taking the time today to share your insights with us. Always a pleasure.
Appreciate you, James. Thank you. See you, Patti. Thank you so much.
Take care. Thank you.
So Patti, one reason I love having NMI as our sponsor is that there's like this unending amount of things that we can talk about, because NMI works with huge technology companies, they work with ISOs, but I think one of the things that some people might forget is they also are a really fantastic gateway solution, virtual terminal solution that the agent can just sell directly to the merchant. And so we talk a lot about the integration side, but, even an agent, you can go into the NMI portal and you can set a merchant up for things like email invoicing. I think it's, one of the most untapped markets right now is the card not present large ticket merchants.
I agree.
Right. So this would be home service providers, all kinds of different really service providers would be like the primary one that you would think of here. And for most of these businesses, what they really need, and it sounds so simplistic, they need email invoicing.
They do.
That's all they need. They need to be able to send someone an email that has a link. That person can click the link and they can pay the invoice. Well, preferably with ACH or a card, right? And NMI has these options built in. And it's just a really fantastic solution. So what I would really encourage our listeners to do, if you do not already have a solution, or you're not happy with your solution, to have a branded, white labeled technology that you can bring to merchants who need to be able to email their invoices to their clients, go to nmi.com, reach out. Even if your ISO already carries NMI and offers it, you should still individually reach out to NMI, have a conversation with their team, and say, hey, I heard about you guys in the Merchant Sales Podcast. Can I get a demo so I can understand the features for me as the individual agent that wants to just offer the virtual terminal to the merchant? And,
don't be afraid to mention that you heard about them on the Merchant Sales Podcast.
Of course.
James
give us a little shout out.
Appreciate it.
Absolutely. So go to nmi.com, check it out. So Patti, I really enjoyed our interview with Jonas today.
Yes, I did.
I've had a topic I wanted to talk about, and I feel like this is a good time. And that is when we talk about kind of external risks to merchant sales, I spend most of my time talking about our share of the merchant accounts. In other words, are we going to be able to sell restaurants, or are we going to lose to Toast? Are we going to be able to sell retail, or are we going to lose to Square? Are we going to be able to sell, card not present, or are we going to lose to Stripe? So I talk a lot about our kind of the external risk of other, companies that process payments are going to take the merchant accounts away. But interestingly, there is a whole other risk that I've been thinking a lot more about lately and talking a lot more about lately, which is, share of the wallet. Right. Big import. Just because you have the merchant account doesn't mean that you have 100% of the payment processing volume. Now we have to deal with so many of these, and I just wanted to kind of list them off mainly so that people will be thinking about it and their strategy. I've got some really interesting partnerships I'm working on now on the consulting side that I'm going to try to bring some interesting ideas over the next 12 months on this. But the ones that are top of my list would be if you deal with restaurant or food service, you think about delivery services, right? How much of the revenue is running through Uber Eats, DoorDash, Grubhub, all of a sudden 30% of the revenue at that restaurant is now you're not processing that. Now it's going through a delivery service. And what's interesting there, and I mentioned this before, those companies are all looking to provide, or I don't know if all of them are, I know several of them are, they are looking to provide pay at the table solutions as well with lower fee structure. But they're like, hey, we have this great technology. What if we put this technology at the table and your
Right.
people
Right.
can
It's
order?
just an
And they'll
easy migration.
they'll offer the free little kiosk, I'm sure, right? The DoorDash kiosk will be coming soon. And now all of a sudden, what's your share? Now all you're getting is what runs through the point of sale directly. So now you're getting 30% of the revenue.
Yeah.
Right.
Yeah.
So I think one is delivery services. Next on my list is P2P. So Venmo,
Right.
Zelle. These are
Did you-
things. Good.
Just as an aside, I don't know if you saw this, but I saw the other day that Amazon will be accepting Venmo.
There you go. There you
And
go.
that to me was like sent off alarm signals in my
It
head.
does. It does. I mean, and so everybody is going to be, business owners. Like I really believe 24 months from now, business owners, by and large, many of them, especially the larger ones, but it's gonna trickle down. They're gonna take Venmo.
Oh, no question about it.
And so the question
if they're not already.
if they're not already, and so how much of the revenue are you losing because they're taking Venmo? Right now, again, I do believe that there is money to be made by integrating Venmo and Zelle acceptance into the point of sale environment.
Right.
You don't, and the great thing about it is you don't have to charge as much because there's no interchange. But you can still make your 40, 50, 60, 80 basis points or 100 basis points on these transactions. Again, I don't have anything to announce yet. I'm just saying that's something I'm working on because I think that's really important.
And it's really important. I just noticed the other day, for example, that FIS, had announced its own real-time P2P service.
Yes.
Now, no doubt it's going to ride on the rails that already exist.
Of course.
But, FIS does, is in merchant services as well as everything else.
So I think you're going to see a lot of that. I think the final one I have, ironically, is FedNow and the ACH.
Right.
It's too early to tell how that's going to play out, but I think it's an interesting, external threat in a way that we need to think about. Now, I'm much more confident with that one that by the time it becomes mainstream, we will have the ability, there'll be a clear path for us to make money on that.
I agree.
But I think you need to be aware of it. You need to be following the changes because it's going to be an alternate, much cheaper form of payment acceptance. In a lot of cases, especially if you're selling B2B, that type of merchant.
And some acquirers are going to be faster to the gate than others in terms of offering that.
Of course.
And you need to be on top of that because that's, and I've interviewed people at RTP in the past and, that's clearly on their radar.
It is. Yeah. And so just something to kind of be aware of. Again, that one doesn't seem to me as big of a threat as much as just a change.
But it's a change you should be ready for.
Absolutely. So that's it. I just want to bring up those three channels. You've got your delivery services, which are going to, by the way, I mean, I'm talking about food service right now, but I mean, let's be clear, delivery services. I mean, I don't even know what it's going to look like 3 years from now, but I have a really, really hard time imagining that 3 years from now, I'm going to be going to a store very often because the delivery services are going to encompass even the smaller retailers and somebody's going to, they're already trying this, but I mean, somebody is going to solve this problem and say to retailers, hey, we can provide delivery service and take all of your inventory and move it to the cloud in a way where people can order and we'll have our drivers deliver it. The delivery thing is coming.
We already saw some of that during the pandemic, James.
We did.
I know in Washington, D.C., for example, there was all the little merchants in one particular neighborhood kind of got together and came up with a delivery service for their goods and services, coffee and whatnot.
Yep. So I think it's just super important. I think you want to be very much aware of those threats of the delivery side, the P2P, and then be aware of ACH or FedNow and the ACH, instant
Better
ACH.
known as combined being faster payments. Really.
Exactly. Yes. Faster payments, cheaper payments. Well, for the second two, the first one being distribution, but yeah. So anyway, that's it. Just want to share that with everybody so they can be thinking about it, and I'll have a lot more to come on that.
Thanks, James. Okay, James. So we've referenced this earlier this month when we interviewed Elaine. I want to talk that is about debit routing.
Yes.
And
sure.
How the Fed has finalized its rule on debit routing. just want to dedicate a few minutes to this. Beginning next July, debit card issuers must enable pinless debit or risk running afoul of the Durbin Amendment. Now, as we've discussed many times in the past, the Durbin Amendment did a lot more than just regulate debit card interchange.
Right.
For example, it requires debit card issuers to enable merchants to choose from 2 unaffiliated networks for routing payments. But at the time that the law was passed, most debit card activity was card present.
Yep.
Then as e-commerce took off, obviously, so did demand for card not present debit card payments. It was an easy enough fix for Visa and Mastercard networks to accommodate. But the regional networks, NICE, Star, Shazam, took longer coming up with a way to handle online debit card payments. And what they came up with was something called pinless debit, which basically replaces PIN authorization with AVS or CVV.
Right.
Okay. The problem, of course, was that most of the largest debit card issuers have taken their time supporting pinless debit, and for good reason.
Right.
But I was really shocked. The Fed said just 6% of online debit card payments get routed through the regional EFT networks.
Really?
So that means
so 94% going through
Visa and
Mastercard owned networks. Yeah.
Right.
I would imagine Discover has some kind of a small debit network, right?
Yeah. It actually owns Pulse.
Oh, that's right. That's right.
Right.
Okay.
Which is still considered a regional network.
Okay. So even including Pulse, they're saying it's 6%.
Yeah.
Or whatever. Yeah. Wow. Okay.
Yeah.
Pretty low.
So that's it's pretty small. And of course, retailers and lawmakers, not surprisingly, have been pressuring the Fed, which of course is in charge of enforcing the Durbin Amendment. They want the Fed to do something, so the Fed has amended its rules to clarify that this network choice provision applies to all debit card payments, including card not present. Now, the plan's been in the works for about 2 years.
Yeah.
But the final decision was only announced in September, giving the industry roughly 10 months to comply. Because the changes, and again, the changes are pretty much in conformance with what the Fed proposed. But I love what the Fed said. It's like, this change, quote, will encourage competition between networks and incentivize them to improve their fraud prevention capabilities. But like I said, the kicker is that it takes effect on July 1st. I think the banking industry is going to push the Fed for an extension.
Well, yeah, we could pretty much bank on that. No pun intended.
So but this goes along debit card routing, as we discussed. The Credit Card Competition Act is talking about credit card routing. Yeah. Clearly, Congress has routing, and the Fed have routing on the brain, so to speak.
Yeah, they do, and I think it's going to give them some indigestion there as they try to figure out how to enforce this. Because I mean, I don't know. We've talked about it so many times, but it's going to be very difficult to enforce.
It's going to be very, very hard.
And then even when they do enforce it, there's nothing. I mean, I guess they could, anti-competitive practices or something. But I mean, Visa, Mastercard can just lower the cost of running debit, and then it's like, yeah, merchants now have the chance to choose which one they want to run it over. Well, they're probably going to run it over the cheapest one. Who's in the position to offer the cheapest cost? Visa and Mastercard.
Yeah.
So honestly, I kind of feel like the government is just really falling all over themselves. And I'll tell you what it is, Patti, honestly, and I haven't really ever said this before, but the real issue here is actually political, right? Because the issue is you have to get Republicans and Democrats to support something like this in order for it to really have any teeth.
Right.
Well, in order to get Republicans to support it, it has to be free market economy. And in order to get Democrats to support it, it has to be, ostensibly helping small businesses and consumers. Well, the problem is there is no solution that does all three of those things.
No, there isn't. It's going to be, you're basically pitting one. It's not even pitting one party against another. It's within the parties, because you're pitting one kind of business against another kind of business.
Oh, right. And it just, it's like they're trying to get everybody on board with this type of legislation. Same thing with the Credit Card Competition Act. I mean, it's just stupid. I'm sorry, but
and look at how hard it was for Durbin to get support for the credit. He's only gotten one Republican,
Right.
and he's got no Democrats.
And what I'm saying is, imagine what kind of support he would have lost, even greater than that, if he would have come out and said, we're going to regulate interchange, like we're going to cap it.
Right.
Well, he would have gotten zero Republican support for that.
Right.
Might have gotten some, Democrats kept a lot of the support on the Democrat side, maybe. But even a lot of Democrats are still more so free market that they wldn't have gone for that. So again,
and they're also very pro small bank.
Oh, right.
Community banks, right.
I'm not making any kind of, this is what I think politically statement. I'm just saying from a pragmatic, practical perspective, the problem here is they're trying to herd cats and get everybody to get on board with this bill. But as a result, they've made it where you can't enforce it. It's unenforceable.
Well, and I think that this debit rule, I think it's actually opportune that this has come up now.
Yeah.
Because I think it's a clear demonstration of just how difficult it is to regulate.
Yeah, I hope that
these cats.
Yeah, I hope that as things talks or get more serious about this legislation, to your point, hopefully there's some conversations with other senators going on behind the scenes saying, well, how did it go last time Durbin did this?
Right.
We don't know yet. It's like 11 years later and we're still trying to figure it out. So hopefully that will come up. And I hope that senators will say to Dick Durbin, let's wait until your last boondoggle runs its course and let's see if you can actually get this thing to be implemented. And if not, let's call a spade and say that this is the wrong approach to regulate this industry. So anyway, good stuff, Patti.